You don't need a massive portfolio to start generating weekly and monthly passive income. I'm going to show you exactly how I do it by selling options step by step and how you could do it the same with the right strategy. What's up, guys? It's your boy Looney. My account is sitting at 52,000, and I want to do a quick shout out to my Discord. It is free to join. And then I also offer premium perks, which involves one-on-one coaching. I do trade callouts. I do giveaways. I have an option selling course and more. You can check it out. All the links to it are in the description. But anyways, you don't need a massive portfolio. There's a really big misconception that to collect dividends, you do need a massive portfolio, which that part is true. And that's not the only way to earn passive income. You can earn passive income on stocks that you're willing to own. And that is called cash secured puts. So I sell cash secured puts, and then we'll get into covered calls, but I do it on stocks like SoFi, Riot, and Mara. These are volatile stocks, but these are stocks that I want to own, and I do own them. So when you sell a cash secured put, you collect income up front, and that's that premium. If assigned, and we'll get into assignment, I get to own the stock, then I could switch to covered calls and keep the cash flow going. This overall creates a repeatable income cycle, essentially the wheel strategy. And you get paid to open, get paid to manage, and then get paid to exit the stock. So let's look at Riot, because this is one of my biggest positions in my portfolio, and it's a very volatile stock. If we just go in just the past year, you can see how much it jumps. It starts at 9, goes all the way down to 6, goes all the way up to 13 or 15, and just really volatile. It's up and down a lot. And this is great for selling options because I can generate income on the way up, on the way down, and essentially acquire more shares. So I have 800 shares, and all of these shares are all acquired by selling puts. Now, I don't have any sell puts open right now, and that's just because the market's been running hot and my average cost is 9.26, and I don't want to buy more shares for a higher average cost. I want to get it for lower. So to open this trade, you go to trade options. And like I said, you could do this weekly or monthly. We're going to go in the middle. So let's do 3 weeks. And the market's not open, so the returns look a little weird, but it will look a lot better when we have market open and you do it yourself. You can do it at any time and in the future. But to sell a put, you always want to do a strike price that is below the current price. And when it's below it, that just means it's out of the money. And out of the money is good when selling options. You want to be out of the money. But you also want to look at delta. I like to go to 0.2, 0.3 delta. And just because of the recent market that it's been running hot, I'd probably go a little bit safer, maybe do one that's a lot lower. So let's go to the $11 put. So we click on this, and then you hit sell. And let's just look at what happens. So it says your contract is 1. That just means you're doing one contract, and one contract is about $100 shares, or you're willing to buy 100 shares at whatever strike price you choose. So $11 is the strike price. Therefore, I'm willing to buy Riot at $11 a share times 100. So essentially, I need to have 1,100 to open this trade. And that's where max loss comes in. So max loss, it doesn't say 1,100, and we'll get into why, but essentially you do need that cash. You need that 1,100 in cash locked up and for a set amount of time. And that set amount of time is at expiration. So 7/25. So you need to have that cash in that position until 7/25. You can close early for a profit or a loss. We'll get into that, but to set up this trade, you do need that 1,100. So you need the 1,100 to start, and then to get rewarded for doing this sort of trade, you get paid, and that premium is what you get paid. So that $33. So that's why the max loss is not 1,100. It's really 1,067 because it takes into account that premium. Now, you get that premium up front. It goes right into your account, your buying power. You could buy more shares. You could reinvest it. You could just have it sit in cash. You could put it in your bank. You could do whatever you want with it. But you don't realize that gain until this trade's over. And to realize that gain, you need the stock to stay above $11. So you can see here, if the stock stays above 11, you have a realized gain of $33. Like I said, you get that $33 up front, but it's not a realized gain until the trade is over, or realized loss. But if it's above $11, you get paid, or you realize a gain of $33. And not only that, you do get your cash back. So you get that $1,100 back into your buying power, and you could do a similar trade, you could do a different trade, but again, that goes back into your buying power. Now, what happens if it goes below $11? You get acquired, is what it's called. You get acquired the shares or assigned shares. And if the stock drops all the way down to $10, doesn't matter. You're still getting acquired the shares at $11. So you're forced to buy the shares at $11. And this is not a bad thing. One, because it's already cheaper than the current price, but two, you want to own these shares. And that's a very important step. I want to own Riot. And for me personally, I wouldn't do this trade because I don't want it for $11. I want it for even cheaper, like $8. But right now is not the time to be setting up $8 puts. But you can do $11 if you think that it can go higher than 11, which I believe so. I believe it can. But I also feel like it can go lower than $11. But overall, this would be if you want to own the shares. And it does say max loss is 1,067. To lose 1,067, the stock needs to go to zero. So it needs to go to like bankrupt or delisted. So it's very unlikely. It is possible, but very unlikely. And that's why stock selection is very important. You don't want to be doing this as like penny stocks or $2 stocks. Really, I would do it with like $10 stocks, somewhere around there. 8 to 10, 8 to 15. That's a good range for where stocks are actually safer and your chance of bankruptcy is a lot less. Doesn't mean it doesn't happen, but choosing your stock selection is very important. You want to own these shares. Now, you could do that on a weekly basis, $33, and it starts to add up. I have 11,000, and a lot of it came from premium. So if I go to my options, realize gain, max, I got 3,000 from doing these trades. And I didn't start with 30,000. I really started with like 2,000. And I just kept doing this, and it compounds, and it keeps compounding, and you get to reinvest it. Now, covered calls is very similar. I don't know how long this video is going to be, but if we go over covered calls, you need to own the shares. So let's say Riot went to $11 or went below $11. I'm forced to buy them at 11, and now I own the shares. Now, when you own the shares, you can now set up a covered call. And that's where you get to earn income, once again, passively. And it's income while you own the shares. And you're basically saying that you're okay with selling whatever stock at a set price. So again, we have sell call. And this one's going to be a little bit easier because the stock has been running hot. So let's say you think that selling Riot at $15, you're very comfortable doing that. That doesn't always mean you don't think it's going to go past 15. It still could go past 15, but you believe that $15 is a good time to sell it. Sure, you might not get the absolute top, but it is a good time to sell it. And not only that, you get paid. That premium we're about to get into is you get paid. So again, I like to do deltas of 0.2 to 0.3. Delta, it can measure like your chance of profit essentially. And you can see that's why it's almost 1-to-1. It's not 1-to-1 exactly with chance of profit, but that 15 is 86% and the delta is 22. So they come close to 100. It's not perfect, but delta can tell you your chance of profit. So there is a 88% of chance of profit according to delta. So you go to sell, and again, how many contracts depends on how many shares you have. If you have 800 shares like myself, you could do 8 contracts. If you only have 100 shares, you can only do 1, but you do need 100 shares at least just to do 1. Now, again, you're going to get paid up front at $30, and it's going to go into your buying power. You could do whatever you want, reinvest, and do anything. Honestly, you could take it out into your bank, but it does say that your max loss is unlimited. That isn't necessarily true. This is if you decide to buy close, and I didn't really go over on puts, but you can buy to close early if you feel like it. I don't really do that, honestly, that often. I only buy to close if my trade is going good and there's just like $1 left to collect on that gain. I usually just close it early and I miss out on like a few dollars. But overall, I don't really buy to close too often, especially with selling covered calls. I don't really buy to close. But if you do buy to close, that's why it says your max loss is unlimited. If the stock goes to $100 and you buy to close, you can lose a lot of money. But I wouldn't buy to close because you think that selling at 15 is a good number to sell at. Now, if it goes past 15, you're still forced to sell it at $15. So really the risk with this is you're missing out. You're missing out on all that profit. So if Riot goes to $100, you're missing out on a lot of money by selling it at only 15. But you're still collecting a gain depending on when you bought the stock or what price you bought the stock. But that's why they have that unlimited loss. It's more closely aligned to the sell put with the max loss, because you could lose money if the stock goes to zero. And that's because you own the shares. On this trade, you'll make 30, but owning the shares, you will lose it all. So really it's closer to the setup of a sell put. Now, if the stock doesn't go to 15, you realize that gain of $30 and you could do this trade again. So you could see how quickly this starts to add up. And I've been generating income weekly, monthly, doing just these stocks. I haven't really overcomplicated with hundreds of different stocks, but you can see my massive gainers are Riot and Mara. 1,100 from Riot, 2,300 from Mara. So the more advanced strategies you can manage and roll. So if my options go in the money with selling covered calls, I usually like to roll out and up to avoid assignment and just reposition my strike. And I do this really with discipline, and I only on stocks I'm confident holding long term. So I keep mentioning that, but choosing the stock is one of the hardest things to do and one of the most important things to do, because you need to believe in this stock and you want to hold it. And I do, and I want to hold Riot and Mara. And I do feel comfortable selling a few offs for some profit, but not just yet. And also, I did mention that I close positions early, and I really just do that on sell puts. I'll close positions early. Sometimes maybe sell calls, I'll sell them for early, but I only close them early if I'm in profit. If they're at a loss, there's not really a point of closing early. I'd rather just get assigned, because when you get assigned, you can at least have the shares and have that share appreciation. And I just do it because it's not really worth the wait, the extra $2 or $3. Now, I did say it's passive, but it's not 100% passive. You could see that I'm opening up this trade monthly, weekly, but you can do longer duration. You could do 3 months, you could do a year, but I feel as though for myself, the 1 to 6 weeks is that golden time frame to generate consistent income. And also the trades do take just a few minutes per week to set up. I'll do them on a Monday, or I'll do them when a stock drops a lot or jumps a lot. I did it on Oscar because it did drop almost 15% or 20% in the past week. So I just did this during the random part of the week. I didn't do it on a Monday, but most time I'll set up my trades at the beginning of the week and the first 30 minutes of the market open. I do monitor deltas, manage risk, and I size my trades responsible. So it's not all passive income. And lastly is I reinvest my premiums into new setups, or I just keep my cash ready for pullbacks. That's why I have that 11,000. So it is weekly income, monthly consistency, and it's a very scalable strategy. And this is how I generate passive income by selling options, whether the market's red or green. And if you want to learn more, check out the free Discord, and the premium links are in the description. Drop a like if you're building real income, and I'll catch you in the next one. Peace.